Cool. Jake Mower. Good to see you, man. It's been a long time.
It has. Thank you for having me.
Yeah, of course.
I
Gabe,
would say I'm excited, but this is a terrifying experience. So.
not your day job
Do
here.
you want to unpack that live, Jake, or just let it sit there?
Yeah. Oh no, just talking. Is this not my
Okay.
preferred activity? So
Yeah.
yeah. Anyway, I appreciate your trust.
What is your preferred activity? Like if you had to pick one.
Hmm. Um. Spend a lot of time looking at the mountains these days. I would say that's up there.
What
Um,
mountains? Where are you at?
in Vermont.
Oh, okay. Yeah.
Yeah. They're not the Rockies, but they're nice.
Yeah, that's awesome. Cool.
I like how you're apologizing for a mountain not being a rocky mountain. Great.
But they're old, right?
Yeah. Yeah.
Seasoned.
There we go.
It depends what model you're using for
Yeah.
earthage.
Yeah. Gabe, you're probably in the best position to give Jake an intro here. You want to give him an intro?
I can give Jake an intro.
Okay.
So we're joined by Jake Mower. Uh, I met Jake, as did Rodney, at Indigo. So another Indigo alum we're bringing in. Jake is he has the most unique and constructive approach to unstructured problems that I've ever had the opportunity to work with somebody. And so, he's also funny, but like from a work perspective, whenever there's a problem that I'm not sure how to approach it, Jake's, top of my call sheet as somebody to get like a different view on it and make sure I'm approaching things in a constructive way. Yeah. So
Appreciate
that
that.
you're welcome. I, but yeah, so we worked with Jake at Indigo, and then when I was at Ripple, I asked Jake to join over there because Ripple has many unstructured problems to work on, and so he was incredibly valuable there. Helped uncover some, I guess, probably can't disclose the specifics, so we won't put you in that position, but like uncovered some incredibly valuable information for the company, and so and drove significant changes in the way Ripple operates as a result. Um, so it was pretty cool seeing getting to work with him again on that. And then as Rodney and I have been talking about benchmarking and some of the challenges there, unstructured problem. Rodney and I have different views on how to approach it that aren't at odds, but just different. But thought, well, as with any unstructured problem that we're having problems answering, top of the call sheet, Jake. And so after some discussion, Jake kindly agreed to come on, and so that'll be the main thing, or our I guess our jumping off point when we start jumping into stuff. But so that's Jake. Jake, is there
Awesome.
anything you'd want people to know about you other than what I just ran through?
Um, let's see. Um, I think yeah, no, you threw in some nice compliments there. I don't want to spoil that. I guess my wife urged me to clarify that I am not offering investment advice.
We,
So
yeah,
so don't sue me if this doesn't work out.
Yeah.
Jake, I'm pretty sure Jake said buy D's futures when they get down to 402 and a quarter. Isn't that what he said?
Yeah, exactly. I actually
He's
had
going long
somebody this
next.
week tell me, "Hey, you guys don't have to say you're not offering futures advice. We know you're not." I'm like,
All
actually, I
right.
think we do have to say that.
Yeah, that's not the person we're saying it for.
Yeah, that's right.
But
That's
fair, yes, Jake is not offering any investment advice, nor do we ever on this.
yeah.
But we do reflect on things.
Jake still at Ripple.
Yes. Yes.
Probably Ripple's been in the news here as of late, so I think seems like he solved some major problems over there, right? Like things are going well on the Ripple front.
Yeah. Yeah. Um, yeah. I think yeah, I think the company is heading in a great direction, and I I am a greater believer in the utility of blockchain than I was, yeah, a year ago. So
Hmm.
um, yeah, it's pretty cool developments for sure.
Yeah, awesome. And then what do you specifically do there?
I I work on varied projects, but these days I would say the focus is on on algorithmic trading activities. So where there's a role for data and models to impact how we place our trades and which trades to place, then yeah, I have a voice in that.
Because ultimately, if you shouldn't be talking about any of this, just let me know. But like ultimately, in my head, I envision if I went to Ripple and made a transaction, you guys then go hedge that some other way. Is that right? Or is it direct?
Yeah, broadly speaking, but yeah, I should probably
Uh,
get
so
that.
so I can flesh some stuff out without putting Jake on the spot.
Sure.
So I mean, I think the best way to think about it is like when you're involved in crypto, like when you're an operator in the crypto space, liquidity is a critical concern, like to anything you're doing, whether that's stable coins, payments, most of the other crypto-based or blockchain-based use cases. Liquidity comes into play quite a bit. And so Jake, I think you sit in the trading team today, and like they're really focused on making sure liquidity exists for Ripple's operational purposes. And
Yep.
so that's what they do, and it is a core part of Ripple's operations that helps keep costs in line and allows them to grow into new markets and do new things. That liquidity, it's probably a major competitive advantage relative to other firms in crypto that aren't specifically around trading or market making.
Yeah. Cool. Interesting, man. Well, I got to see a touch of that, I think, on the grain side, or something very similar, I would think, on the grain side at Indigo. So, one of the more exciting projects I ever worked on was the JPBs, as Jake hated to have them
Oh
called.
yeah, I forgot about that. That was a terrible name. Yeah.
The
Sounds like
J
an amazing
being
name.
Jake in this, which Jake was very uncomfortable with. Yeah. Yeah.
Well, so I mean, when you end up developing solutions, you never want your name attached to it because no matter how long you're around, that means that if it breaks, somebody's calling you. That's why you don't want your name on things. Jake
Gotcha.
may be presenting like he's, oh, I'm humble and I don't want that. No, 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 no. Jake doesn't want it. Didn't want the phone call 3 years later. Something wasn't working. So so Rodney, I'm a little disappointed you didn't notice. I changed, like my camera's looking something different now.
Dude, I was gonna say something, and we did something we don't normally do. Me and you got on a little early and just like
Yeah.
shot whatever.
Caught up on some stuff. Yeah.
Yeah, and I was like, oh, I gotta mention Gabe totally changed his background or changed his room, and I totally forgot. So what's up?
So I just moved my office around. So like I cleaned it, which
Right?
I probably haven't done in like a proper cleaning in like 3 or 4 years. So I did that, and when I like, and then as part of that, I just moved my desk. So same place, just different background. Although, so I've had a couple calls, and I realize every time like I haven't like done anything like I mean, it's it's not a curated ground if that's not clear. Like I the first call I was on, like there was a so there's still a bunch of junk over here. Like I think that's a bottle opener that I just
Uh,
haven't put anywhere.
yeah.
Build Totoro action. There's a droid, some Legos, uh, BattleTech. Anybody like BattleTech? It's a Marauder.
Never got
No,
into it. Know what it
BattleTech.
is. Never got into it.
That's okay. Great.
Yeah.
Um,
How about the computer there that probably should have been thrown away, right? I assume that's an old one that
That's an old one. Yeah. So I need to take these apart and blow up the hard drives.
got it.
That's why they're still sitting here.
Is that a
Um,
baby bottle?
it is. So it's a German baby bottle. So when I used to work at Cargill, um, we covered farmers and ranchers globally, and so one of those groups globally is in Europe, and but the volume that we did in Europe was really seasonal. So there was basically a period of about 2 months every year where they were really active in terms of where farm culturally just how they price, like it tends to be in this 2 month window.
Hmm.
So what happened was for 2 months out of the year, given that I'm on the East Coast and most of the team was here or way farther east, I would get up early, so at like 4 a.m. and cover the European needs. And so those guys really appreciate it. So one year they sent me a bunch of random Oktoberfest stuff. Most of it broke, but that bottle's made of plastic, so it survived. So yes, that's
That's
that.
awesome. That was that like wheat Gabe wheat farm?
Yeah, mostly wheat.
Yeah.
Yeah, Matif, and
And what was the compression for? Like lack of storage and stuff like that, or like harvest type?
yeah, So the system out in Europe is largely there's a lot more co-op situation, like in government underwritten co-op. So the storage like is a lot cheaper, and it's basically overbuilt,
Yeah.
especially in Germany and France. And
Mm.
so most farmers don't have storage on farm in those areas. It varies by country, but they're also the largest producers there. So
Yeah.
in Western Europe.
Yeah. Cool.
Yeah.
Jake, I'm gonna make you very uncomfortable here, but like
Okay.
when we work together, I would call you the artificial intelligence guy. Like that's what I to my wife, I'd say, yeah, Jake, the artificial intelligence guy. And I remember at the time, artificial, and this is only what, 5 years ago, 4 years ago, there was like I knew one artificial intelligence guy, and now I subscribe to three artificial intelligence, large language models. I never thought I would do that. It seems like artificial intelligence is everywhere. Man, I'd love any thoughts you have around what that curve has looked like in the last 5 years.
Yeah. Um, I guess I think of it from two directions. One is, excuse me, is general utility. So yeah, we rely on ChatGPT in our lives pretty generally, from coding advice on how to make a function more efficient to how I should do it in the first place to what we should be what should be on our menu at home every week. It's actually very convenient. Yeah, so there's there's that. And and then on the other side, it's interesting to see the problems in which it's really not that great for, and problems where there's n not a lot of data usually are in that category. So uh, if you imagine having a time series of daily data for 3 years, that's about 1,000 data points roughly. And 1,000 data points for a neural net is basically equal to zero. And so for those, it really governs which model is important. And yeah, those big LLMs, maybe there's a way to adapt them, but um, yeah, AI generally not the answer for those.
Yeah.
So like what problems would you be like, I'm not gonna go to Chat GPT, or I have zero expectation of an AI being helpful with today?
Yeah, for sure, those small data problems. So monthly data for sure, quarterly data, unless it goes back millions of years. Or yeah, I mean for sure that. But then uh, even if for a problem, AI or machine learning or whatever word you want to use, seemed promising, we'd always want to have an intelligent benchmark where we are comparing that super complicated, probably black box model to just something that's easier to implement. So how much better is it than a random walk or than a linear model? And that's always a good place to start because sometimes the results are great, but the results are also great for a linear model, which is a lot better. So uh, that.
Um, yeah, but I'm entertained by your slip in there on machine learning. Like when I have conversations with folks, I said I largely feel like AI is a marketing term in most cases, and we're really just talking about certainly sophisticated machine learning, but like it's still machine learning stuff. It doesn't feel intelligent. Is that do you that's my Ronnie's asking you because you're smarter than both of us by like orders of magnitude on this.
Yeah, for sure.
So I'm curious, like that. My digging in like has kind of at least for this moment in time solidified that position, but I'm happy to be argued out of it if you've got a different view.
I had a weirdly formative moment in high school where I was looking at our toaster
This
and
is
I
still AI,
saw
right?
what?
It's still AI related, machine learning related.
Sort of.
Okay.
So anyway, I was looking at our toaster and I saw that it had a bagel setting, and then I never really thought about it, but then upon like very light investigation, realized that the bagel setting was just you turn on the inside and not the outside. And it's like the toaster doesn't understand what a bagel is. It's just doing this
Hmm.
Following some
relatively,
instructions.
yeah, it's just yeah, there's rules and it's following them. And humans, AI, and linear regression are somewhere on that spectrum. And there's a lot of concern that, or concern or excitement or whatever, whoever you are, that AI will get to and surpass and like crush humans in the level of um, comprehension, like fundamental understanding. I have also a mild fear that in AI getting more powerful, we're going to understand the very mechanistic nature of humanity, and that will be reduced to the bagel setting on a toaster. Um, so maybe
You're
that is
saying
not a
some
very
of
helpful answer, but
Yeah.
so you're saying there's a, I'm going to say, romanticized view of a human mind today, and the romance will be taken out of it as we better understand how more sophisticated AI modeling or learning driven modeling works.
I think that would be an interesting outcome. Seems possible.
Seems possible. Have you read The Singularity is Nearer? No, it's a. I think it's a futurist out of. Well, I say futurist. I think he's actually an AI guy out of. I think Google. But he, whatever. I'm not going to go do a book report. Just curious. Okay.
That was the last episode. Didn't we do book reports?
We did book reports last episode. Yeah. I
Hello.
I did The Grapes of Wrath. Uh, Rodney did Romeo and Juliet, which was like weird that he picked a play.
Because you
Uh,
can watch a play. I didn't have to read
Jake
it.
doesn't listen to the podcast, so he's not sure if we're kidding or not.
Yeah, exactly.
I listened to like the first half of the last one. I didn't hear the last half. Maybe did
That's
you
the
end
book
with it?
reports came in
Or
late. No, we did not do a book report.
No.
Sorry. Uh,
got me.
um, oh, the other thing I wanted to talk about in terms of rearranging my office. So it made me feel very old because so I did it on Sunday and I put in some new shelves, which are over there. And like the boxes were relatively heavy, like it was 100 pounds each in terms of hauling those up the stairs and like moving all the shit around in my office. And so my hamstrings, so I did all that. And and then I worked out the next day pretty hard and my hamstrings are still sore. Like, and they were so sore the day after. I've got one of those thermogun things, like
Hmm.
the
Yeah.
and my wife kindly was like, do you want me to use that on your hamstring? I was like, sure. It would hurt so bad I had to make her stop. Like it never been quite that bad, but yeah. So I'm still sore today, which
And you think it was from moving more
definitely,
than
definitely. It was, well, it was from moving and then not resting and then
yeah.
working out. Like
Yeah.
it was just stupid.
Yeah.
Right. It was a dumb move, but like dumb move Gabe 10 years ago probably would have been fine. Certainly 20 years ago. Dumb Gabe in his mid 40s, not so much. So will I do make that mistake again? Absolutely.
Yeah.
Absolutely.
Only for the next 60 years,
AI
probably.
would never do that, but I will. And
But it's
that's
pretty gentle slap on the wrist. Like you didn't tear an ACL or anything. It's
no. So I'm pretty paranoid about tearing like ligaments and tendons, and so and having spent years like learning to work out properly, like I've got pretty good form when it comes to like lifting heavy objects and stuff like that, and like being smart enough to know like, oh, this is not a good way to turn. I'm knock on wood, right? Like that, my arrogance and pride will come just ahead of my fall there, but like. Yeah, the nightmare that I always hear about, one of my doctor friends talks about, is like middle-aged men basically blowing out their Achilles tendons. Like that's a pretty common thing, is because they just start cold and then run and like don't think about it and just it's terrible. Like it sounds like a nightmare. So I work I work hard at not running
So I,
without significant warm up.
I've been a big CrossFit guy for like 10 years. And one of the things in CrossFit is you have PRs, you keep track of PRs. So your personal record at like a million different things. So no matter what we do, I can log it and you keep track of that record. And I always tell my wife as I get older, like I'm afraid I'm never gonna hit a PR again. Like it's almost like the old thing, like you didn't know the last time you hung out with your friends on the playground was gonna be the last time you hung out with your friends on the playground. It just never happened again. I feel like that about PRs. It scares me to death. And it was just like maybe a month ago, I put up a new PR in squat, which I was really happy with. I never thought that would happen. And then I couldn't walk for like 3 days afterwards. And my wife was like, "What are you doing? Like, who are you trying to prove this to?" I don't even announce it to anybody. I don't even like
It's
tell it, I didn't even tell her really. Yeah.
it's all ego, man. Yeah. It's not about
So I've
showing other
like,
people.
yeah.
Yeah.
But you're right. There should be like a cost of capital where you discount, where you get like it's either like whatever, inflated or you deflate the record or whatever as time goes on.
Yes, exactly. It should be inflated, maybe. Well, what I've decided is no more. I am not even going to attempt PRs in squat, deadlift, or squat, deadlift. That's it. I guess squat and deadlift.
When you say PRs there, I mean, is it like single rep max?
One rep max. It's just a bad idea
Well, I
at 40.
mean, dude, even the NFL, right? For like bench and stuff, like it's 225 as many times as you can do it, right? It's not,
Yeah,
they don't
right.
do the single rep max thing. Man, that's from when you and that's late 90s. Like that's old.
90s were the best. Yeah. So
I
I'm
think,
done. Yeah.
you can come. I bet so just like the 225, like they'll tell you like if you do 225 10 times, it's this is your max. I'm sure you can get that for other stuff. I guess I'm saying I don't think you have to stop chasing the PR high. I think you have to do it more responsibly.
Yeah,
Is what
that's a good call. But it's gonna be hard because I make fun of my kids when they tell me. So they're in high school and sports and stuff, and they're like, "Yeah, my max is 275," and I'm like, "Oh, cool. You did 275 today?" And they're like, "No, I did 225 18 times or whatever." And I'm like, "It just doesn't feel the same when you're 16, but at 45, I'm signed on. No more one rep max."
yeah. I mean, I've had to move my Peloton workouts so that they're more along. Lately, I'm doing like hour and a half, 2 hour rides frequently now, as opposed to like high intensity 20, 30 minute rides,
Right.
which doesn't feel nearly as satisfying as like, man, I whatever, rode this bike at 27 miles an hour for 20 minutes. Like,
Yeah,
no.
exactly.
Yeah.
We're watching the Tour de France this
Mhm.
month, and yeah, it's any any pride that I ever had riding a bike is just destroyed
Come
watching
on.
them go like 40 miles an hour up the Alps.
Yeah, that's
It's
great. That's great.
amazing.
Yeah.
Well, that's your project. You need to find a better bubble to put yourself in so you can feel better about yourself.
Yeah, yeah. So thanks for having me, guys. All right.
Speaking
Hey,
of bubbles to make Jake feel better,
yeah, exactly. Hey, back to the AI type stuff, Jake. Is there things that you're surprised you find yourself using it for that is like really useful for?
Yeah, for sure, life stuff. And I mean, like, what should we like? What's a good menu for the week if after we've given it some prompting about what we want to do and like lifestyle, like medical questions. But yeah, in terms of work, um, yeah, I would say I'm trying to categorize it. Yeah. So. I don't know if it's a surprise, I guess, but it's cool. It's really good at spitting out code that implements the model suggested by different papers. Uh, and that
Mhm.
is fantastically helpful. Um,
Well, man,
because
so you're saying like enter upload a paper, like a scientific paper where somebody's talking about how they might solve a problem and it spits out the code that actually does that. Yeah.
yep.
Hmm.
Yeah. Really like an almost incomprehensible time saver. Excuse me, sorry. I think for two big reasons. For yeah, just limitations I have. I don't have a background in the crypto space. I've been working there for a couple of years, but there's a lot I still don't know, and so that is yeah, it's very helpful to get those tips. And then also, I yeah studied I was studied science in school, was not AI, and so getting caught up um, on this the fundamentals of model building was yeah very pretty sweet.
Hmm. And you're so when I think of AI, I think of large language models, right? So I'm ChatGPT, this is my stack. ChatGPT, Grok, which is amazing. I don't know if you're using it, and Claude,
Right.
which drives me crazy, and I'm gonna cancel my subscription
Oh,
too.
really?
Like it's keep you heard about when Claude blackmailed um a person? You didn't hear this?
What?
So it was like this test thing. I'll find the article, and I'm certain it was Claude. So they do these tests where they like, I don't know, try to figure out if artificial intelligence is doing bad things. I don't know how these work, but supposedly they set up this test. So it was staged, but it really happened where a guy was like sending emails to a fake mistress, right? That wasn't his wife. And I don't know how ChatGPT or whatever, Claude got a hold of these emails. But then the guy in his prompts to Claude threatened to cancel his subscription to Claude. And it came back and said something around the lines of like, boy, it'd be a real shame if your wife knew you were cheating on her. So that was a real thing that happened a while ago. Again, it was a test thing and whatever. But since then, Jake, what I've noticed is I'm not asking it to do immoral things, but it comes back to me and says, I'm not comfortable with that request, right? And I think they put in some sort of control there. To be clear, I'm not like doing nefarious things. Most of what I'm doing is saying, hey, I need like don't tell me how to change my code, just spit out the code, right? Like tell me what I like, let me copy and paste it. And it's like I'm not comfortable like messing with your project or something like that. And that's new, I think, since I don't know. Do you use Claude, Jake?
I do. Yeah,
Hmm.
I have never seen that.
I mean,
So it sounds like user error. It sounds like Rodney's trained
must
his
be.
instance of Claude to like be like that.
Yeah. Me
Um,
and Grok, we're like this, man. We love each other
For code too?
for code. I
Okay.
found that Grok, combination of Grok and ChatGPT are my like go-to.
Hmm.
Which is
All right,
weird
that's good to
because
know.
everybody says Claude is the winner, right?
That's what I use.
Yeah.
Yeah. Yeah.
The only thing I can think is I think if you're actually an engineer and like really have an understanding of it, it's possible that Claude is better. But
Okay.
like the way it interprets like the request, for whatever reason, Grok and ChatGPT are better for me.
Okay. Sweet. Um, was the last question uses that have surprised me, or have we moved on from that? Forgot.
Oh, I mean, we're still, I'll take that. What else surprised you? Yeah.
what whatever you want, Jake.
Yeah, so yeah, again, I don't know if this is a surprise or not, but um another background I do not have is computer science. And so when I have algorithms to do something, it's relatively common to pass my function into one of these and get feedback about how it could be done fantastically more efficiently and wildly productive.
Oh, yeah, that's incredible.
I mean, the best analogy or not analogy, the well, maybe it's, I don't know, whatever. The best explanation I've heard about how to think about the LLM side of things is like it's capable of reading like a million books. Like you can't read a million books. It's read a million books and reasonably well comprehends them. And so asking it questions about those million books is super helpful and like not something you'll ever be able to do. But it's just a different version of your point, Jake, that like for large data sets, it's super helpful. So there's, plenty of books out there on optimal, data querying and stuff like that. that I'm sure it's able to pull in. And then for stuff that's, at least at this point, I'm going to say more creative, um, it struggles. I, as we were talking, I forgot, I found one other artifact that people might find interesting.
The runner's handbook.
That
That's it.
is the Runner's Handbook from the Chicago Mercantile Exchange.
Oh,
It would be circa 1998, maybe? Oh,
that's
97.
like codes to live by or what?
No. Here's a map of the CME trading floor. So, like,
Okay.
that's how I got my start, right?
Yeah, right.
As a runner for a company that I don't know called Iowa Grain that may or may not be around anymore. But like my parents, I had a bunch of random stuff from when I was onboarded at the Merc. And yeah, so it just says, I'll read it. You are urged to read the trading floor orientation manual. This will give you a brief introduction. Like, so there, I have other random stuff spread out, but I forgot to move this out of the back. But so the its orange was for some reason set off against the other orange to me. And yeah, but that's what this is. So there's yeah, maps of the old trading floors. It explains what all the order types are. I wish I had this years ago. I could have, saved me time figuring out how to word like different, explain to
Exactly.
somebody what a stop order is on a deck. Like,
Yeah,
anyway,
exactly. It's just copy paste.
copy
Are there
paste.
new orders since then? There are. Well, certainly there are, like Taz orders.
Taz is probably the newest. Like the newer orders are really more algorithmic. So like if you buy, if you're using a trading system off the shelf, a lot of them will have different algorithms for execution.
Right.
Um, so there's like Taz is trading at settlement, but you can do like if you're a professional trader, you may be doing large transactions or trying to hit like the
Hmm.
way each market settles can be a little bit different, but most of them are some version of weighted average price traded
Yeah.
within the last minute. And so you can actually put in an order to trade at the weighted average price of the last minute. I don't know exactly how those all work because it feels like you have to predict the future a little bit to make that work.
Yeah.
But yeah, that's so you'll get stuff like that, but they're not official orders. Taz is, but the other stuff isn't.
Yeah, so that'd be like proprietary in the trading
Yeah,
platform.
to the given platform. And then
Okay.
obviously any given trading entity may have its own
Yeah.
proprietary order types outside of the
Hmm.
trading system itself. Yeah,
I'm mostly limit order and market order. That's where
we
I
we like the old Taz Acomoc.
operate. What's that?
That's well, so
Yeah.
Taz is trading at settlement, and then you would put that order in, and then you'd OCO, which stands for order cancel order against market on close (MOC). So the idea being that you wanted, so no, to be clear, you couldn't call somebody up and say, "I want to put in a Taz Acomoc."
Yeah.
As idiots on the trading desk, that is what we would say to each other.
Yeah, right.
I'm going to Taz Akobach this, right? Like, but that was not it. That's not an order type.
That's all.
Um, yeah, and even the contingent orders, I feel like we're taken under discretion. But yeah, so at the end of the day, if you want to sell at the close, right, you want to ideally trade at the settle. If you can't do that, execute in the close.
Man, if there, I love the grain industry. I know we've gone over this 1,000 times and futures and everything, but if there's one thing I hate about the grain industry, it is the code language. Like the fact that Taz Como is a
Akomach. If you're gonna
whatever.
say it right,
Exactly. Like nobody cares. It means nothing to anybody except for the four guys that know what that means. That
that's
drives
exactly
me
right.
insane about this business. Like the fact that, when you show up at a grain elevator anywhere in the world or anywhere in the country, there is a yellow post-it note taped to the monitor that says Z equals December, H equals March. Is the craziest thing in the world to me. It's like the most disappointing thing in the world.
I don't know why that's confusing to anybody.
Yeah. Yeah. I spent a year learning that. It's like, what a waste, you know?
Hey, Rodney, what's Feb?
I'm starting to learn these.
It's
I
G,
think
right?
it's
Oh, Jake, come on, man.
did you know it?
Oh, you didn't hear you. Oh, let's
G.
go.
Is it
Jake got
G?
it before you.
It's gotta be
What?
G.
It's G.
It's
It's
gotta be
G.
G. Yeah. Yeah, so it goes alphabetical, right? But it
Yep.
skips letters, obviously, because there's only 12 months. Seems pretty random. where it skips.
So I think it's driven by legibility concerns, but that kind of goes out the window when you look at options, which basically use almost the entire alphabet.
Yeah, right.
Um, yeah, I don't know, man. It's ultimately all driven by shorthand stuff.
Yeah.
I'm just grateful that it is alphabetical. Yeah.
Yeah.
Um,
I all the, the corn and soybean traded ones. I'm starting to learn them because of short dated options, right? That's where I'm picking these up. And then cash grain. So now when I use bar chart for my cash grain data, and they're all using essentially those same codes to, spit out to identify.
mhm.
So
um, all right. Well, maybe we should talk to Jake about what we actually
yeah.
plead with him to come and talk. You want to talk a little bit about kind of, I think it's driven, well, I guess I'll give some context and then Rodney will flesh it out and Jake, you'll give us the answer.
Mhm.
Um, so I think one of the things that any trader struggles with is how to evaluate performance.
Mhm.
Because, obviously making and losing money is pretty straightforward, but what you don't want to do. So you run it. So I'll talk about it in the abstract when we think about trading stocks. So before we get into the specifics of trading grain, like I can't tell you the number of times somebody's told me like, oh, I bought whatever Nvidia and it went up and that was amazing. And then but it's like, oh well, let's look at what the Nasdaq did like over that period of time,
Mm.
right? Because like that's the benchmark that I want to know is like, is it worth my time? Am I good enough to trade individual stocks? Or should I just go long the index, right? Because one of those requires a lot of research and the other one doesn't.
Mm.
If you've decided that you think it's smart to own equities, and so it's not so if you made 10% on a stock trade, great, but if the index made 15, like you're terrible, right? Like you just wasted a bunch of time and you could have made 5% more return, and so in when we look at 401ks and things like that and evaluate them, people tend to be benchmarked against an appropriate index. And not only that, like, there's fees and all that kind of stuff involved. When we, and this I think has always been the case, unfortunately, in the grain market, it's this weird phenomenon, not weird, frustrating phenomenon where it's really difficult to think about anything other than the harvest price as a benchmark. And so I mean, with any of the managed programs we've seen over the years, regardless of how much marketing or education the group selling that managed program does, the farmer base about I don't know 80-90% of farmers probably look at the price at time of delivery and compare that to the price that managed
That's right.
program gave them, and that's the evaluation, right? So it's success or failure based on if I did nothing and sold today, would I be better off? Not an unreasonable question, but at the same time, it feels like a bad way to evaluate a system of pricing, just because it's so arbitrary and unreasonable, right? Like, um, and so we can sit here and go like, well, you should maybe look against an average or something like that. But even then, if people are able to get mentally off the idea that I should compare my sale price versus the day that I delivered it, the next default is generally the high. What was the highest price I could have sold at? Did I sell everything at the high or not? Right? It's borderline binary, right? So success is selling everything at the high, and failure is not. And like it's super emotional, completely irrational way to evaluate performance, incredibly common. And I know, and I do it myself, right? Once I'm in a position and I eventually get out, like I absolutely will go back and go, well, what's the best price I could have sold at? Boy, I'm an idiot for holding it like any time longer than that.
That's right.
Um, and so, Rodney, I don't know if you want to give a little more on.
Just that I would say so from the futures component, I remember that, Gabe. Like it felt like that harvest benchmark was easy a lot of times, right? So like when you beat it, you usually beat it pretty well and you could, feel really proud of it. But then if on those couple years that it didn't beat it, it like got crushed really bad, right? And that was also the same time you were trying to sign up these farmers for the next year, right? So those two periods tended to be the same. So what we saw back in those days was like sign up would, if we had a good year, next year would be bigger sign up, right? And we have a good year, next year would be bigger sign up. And then we have a bad year, and all of a sudden sign up goes to like virtually zero, right? Which doesn't make sense because, over 5 years or 10 years or whatever, it's done a good job. And I'd say now, Jake, I'm running a cash grain consulting service for farmers, right? So it's mostly on the cash side of things. So futures is a component of that, right? But there's also like, hey, how did we do on basis? And like really in the end, what me and Gabe kind of jaw back and forth about is the price doesn't really matter. What really matters, I think, to the farmer is the net return back to the farm, right? So this is cost of money, cost of production, blah, blah, blah. If I'm raising 300 bushel corn, I don't need as much per bushel and probably won't have the opportunities for as much per bushel if I only raise 200 bushel corn. So just really trying to wrap our heads around, hey, what should we actually look at? And before I move on, I'll tell you a guy that I learned a whole lot from that I worked with at FS. He always told me, Rodney, you're making this too complicated. It is not this complicated. He goes, take an average of the guy's cash prices from last year, and if he beats it this year, he's better, right? And that's really simple, but I don't think that's right. I don't think that's a good benchmark. So I'll stop
That
talking.
may not be realistic.
Yeah.
Um, um, so there's the question of what to compare against. But something that's distracting me, I guess, is that even assuming that we had something to compare against, we would need to calculate a metric on that difference between what you got and what you like should have got. And for that metric, what's psychologically getting 50% or I should say 50 cents worse is more bad than getting 50%. I'm sorry, let me start again. Getting 50 cents worse is more bad than getting 50 cents more is good, right?
The loss hurts more than the gain.
That's a nicer way of saying that.
So
Um,
so so
so
so so I'm just because this stuff I'm gonna so generally speaking, right? Most humans don't find the risk of a loss of 50 cents worth taking if the upside opportunity is 50 cents because they feel worse about the loss.
yeah, so there's two components of that, I think, in this case. One is the psychological component, which can be um, be addressed, and then there's the. I guess I'm curious about the other part, which is the legitimate component. So for example, if input prices are, and this is the question mark after all this, if input prices are following this benchmark and you do worse than that, that's a lot worse. You put yourself in a pretty bad financial position potentially if you're not able to keep up with
That's right.
that.
That's right. That,
So yeah, can you talk about that, like what that downside risk is?
yeah, I think so. That is I think one of the things I struggle with and why I actually end up making this more complex than maybe it has to be, right? I say price doesn't matter because, if my benchmark is $4, let's just say my benchmark's $4, which by the way is a benchmark for a lot of farmers, right? There's some version of that. So my benchmark's $4. Okay, but if my input cost just doubled, now like today, most farmers' break evens are a little above $4, right? So $4, we used to be excited about selling above that, right? And that was the benchmark. And like today, man, if I mean, yeah, I couldn't make anybody sell $4, really. Um, and it's because essentially cost of production has come up so much relative to that price.
Yeah. So and cost of production, does that relate to the previous year's prices?
Not really. I would say I'm sure there's some boundaries that they can't hardly get out of, right, Gabe?
What do you mean?
I don't know. I mean, yeah, I'd say they're not related, Jake.
So, so I mean, yeah. So to answer the specific question, last year's price, what our futures prices are effectively decoupled from input prices this year, the cost of production for this calendar year. I would also go so far as to say the market does not care about cost of production numbers
That's right.
this year anyway. Like within within a given year. So the market itself is not interested in what your cost of production. Actually, the market itself never really cares what your cost of production is, right? So as a business, it's not looking and going, oh, you should get this because it costs you at least that to make it. And as the business, you don't get to say, I have to charge at least this, even though it's like everybody's got the same, you know, if everybody has the same cost of production. The fact is, the moment you decide to make the crop, right, and made the investment to do it, like nobody cares what your cost of production is. The
Yeah.
market could care less. Was that robustly answer that question?
Yeah. I just wanted to check because when I looked at it a couple years ago, it kind of, and maybe it was just the specific years I was looking at it, it did kind of look like there was some relationship, but yeah, that was not robustly analyzed. So
I think over time, well, again, like I think, you know, the words we're using matter, right? And so we're talking about whether or not the market cares about it. Cost of production, though, absolutely impacts the production side of the formula.
Right.
But I think, if anything, cost of production last year and earlier in this year will impact price this year, in that higher cost of production will lead to less production of that particular crop. Right. So if I've got the capacity to switch between, you know, at least two crops, if not more, all else being equal, right? If I thought net one was more profitable, I'd switch to that. And so I think that's where cost of production comes in.
Yeah, to say another way, Jake. So these guys, corn in my neck of the woods is planted in April, right? I tell farmers you're long corn for the rest of your life
Mhm.
right now, right? So that's like where I want their headspace. But for real, in January, right? A farmer could say, I'm not planting any corn. I'm, planting all beans or planting hay or whatever. So I do think the market has to do enough to entice these guys to like actually make that decision
Mhm.
because they aren't 100% locked in on that really until the seed goes in the ground. I'm sure there's some nuance where they're more locked in. Um, so there is this market function that says like, hey, the price kind of has to be high enough, or people have to believe that it will get high enough that it makes sense to plant that crop. Otherwise, it'll go to something else.
Yes. Um, so benchmarking against selling evenly across the year. Does any grower do that?
It is the least popular thing in the world, Jake. And I think the word average has a lot to do with that. Gabe, you have thoughts on that, I'm sure.
Well, I mean, we talked to Nate Roberts, right?
Yeah.
That if you listen to the last episode, that would have been Nate Roberts. Like Nate is a unusual guy in that he approaches marketing from a fairly disciplined seat, and I think that is, you know, the way he talks about it is, well, I got to feel crazy being dumb some years. That's not like, you know, Nate is dramatically underselling like the actual wisdom with which he approaches the market, and so he's somebody again who's an exception, but still somebody in that market who does do that. Like I know he's looking. What were my I think the way he'd probably frame it is, what were my opportunities to sell? I think he'd get really frustrated if he didn't start looking soon enough and felt like if he normally starts looking. I think he told us like, I mean, he's already made sales for next calendar year,
Yeah, like
right?
18 months in
For next
advance.
year's crop.
Yeah.
Um, so I think he'd be frustrated. So that's how he looks at it, is like, did I start taking stuff off the table? I don't know that he would think about it as, did I sell? You know, I don't think he'd think it's right to sell an equal amount every year. I think there's some sort of staging that he uses in terms of like, all right, I know I'm gonna farm next year. I'm okay selling up to this because I know that I'm gonna do that. And then, okay, I bought the seed, so now I'm comfortable selling this much more. And now we're this much through, like we've passed this threshold from a production risk perspective, and so I'm comfortable selling more. I don't. It's not quite that regimented, but I know like that it like those there are gating items that he uses as signals to start looking at selling more than he has. If that makes sense.
Yeah. A couple things are coming to mind. First of all, I think one thing that I mean, in speaking of the challenges of the grain industry and the codes, and whatever, one challenge that I had when I first joined Indigo was that I didn't fully appreciate that there were two dimensions of time that people cared about. And for lack of better terminology, I just named it as the horizontal. Yeah. Please tell me if you guys have better words for this. Horizontal time and vertical, where horizontal time is like what time is it? It's just like normal time. And then the vertical is the delivery date. So on any given day, prices at these different delivery dates. So it's like
Mm.
in the future, but it's like at one instant in time. Um, yeah, so let me stop there. Are there better words for it than that?
There are not, Jake. And by the way, I distinctly remember the day you walked me through a whiteboard discussion where you like laid this out. You're like, hey, I just need to get this out of my brain and get your feedback on it. And it completely blew my mind that like I've always struggled with even talking about that, right? Like as I'm building stuff to, tell farmers where their contracts are at or like, talk about the history of whatever. I never even wrapped my brain around the fact that there's like two dimensions of time here until that day you put it on the whiteboard. So no, I would say there is no word for it. You know.
Cool. Yeah, it kind of comes up because even I guess to take this naive benchmark of selling equally every day, it's like the question of okay, on any given day, what are you doing? Like selling where or when? Selling for when?
Yeah, exactly.
So I remember Rodney, you had cool calculators for like on any given day, what what delivery window is best given everything that's going on. And so yeah, maybe instead of like where the super naive want to sell at the current delivery every day, if that even makes sense given the time of year. Yeah, selling at the best. And that's one level up. I guess the next another direction to go is yeah, comparing against what growers are currently doing as a means of yeah comparison. But yeah,
Meaning comparing yourself against your peers.
yeah, your peers or in a structured way what you have done in past years.
Mm.
As long as you know taking along like enough data to draw a reasonable conclusion because yeah sometimes at least when I was looking at it, sometimes harvest was the best time to sell, but generally it wasn't. So yeah, taking like a solid 10 years. Where that gets more tricky is when you have a more sophisticated selling algorithm than just selling at harvest to compare against, where you um, are looking at what would be the benchmarks to like crop progress in July or what other factors?
For it, like how far along you should be, you mean?
Yeah.
Yeah. I mean, like, yeah, planning progress, probably, I think it really comes down to these USDA reports is a benchmark for a lot of people, right? It's just kind of like sets these lines in the sand that they have to feel like they have to make a decision.
Was it so? So there's two components, right, Jake? One of them is because I am a business that's growing a plant, like there's risk to that plant growing and how much of it is going to be produced, right? So that's like a risk management piece in terms of making sure. I'm comfortable with the amount of fixed price risk I put on lines up with the amount of production I expect, right? So that tends to be one gating item. The other thing is most commodity markets, including corn, like there's not a model that tells you what the value of corn should be, right? Like that doesn't exist. And so everything is you know delta based, right? So it's like a new piece of information. How much did that so the market drifts somewhere based on a general understanding of current conditions, and then a USDA report adds in a very heavily weighted additional piece of information, right? And so then on a relative basis, it will drive action. And and so I, Ronnie, you call it the USDA stuff. I feel like what we see is the USDA reports will drive action either leading into a report because people are worried that something's going to happen, or something significant happens on the other side. Very rarely have I seen like a USDA report that came out as expected and suddenly everybody did something.
No, yeah, that's true. Yeah.
Right. So if it's like as expected and market changes in line with any other day, nobody does anything. Even though that was a significant moment that information was added, it was just confirmational information and it doesn't drive action. Um, which I just think is notable in terms of trying to consider like you're saying, what are the decision points? So I mean, I guess my position would be large moments of market volatility are the actual either expected or experienced volatility tend to drive decisions
Yeah.
outside of the if somebody's super disciplined and like doing it based on planning progress or plant progress.
The other thing I'd say, Jake, that's really annoying about grain marketing is what we really need is a benchmark that applies today, right? Like it's hard to say, it's hard to make a benchmark. Well, it's hard to make a decision around a benchmark that's going to happen in the future, right? So like right now, 100% the benchmark that a lot of people are going to compare themselves to is what's the price of corn the day they're hauling, right? But that doesn't really help you make a decision
Right.
today when that price isn't going to come for 4 months, right? It's like irrelevant, kind of.
Yeah, yeah. Just one thing we worked on back in the day is coming to mind, which is a not so much a price forecast as a price uncertainty forecast. So taking current market conditions and not doing anything fancy, just a very basic, like it's a random walk kind of thing. So current price equals last price plus some random number that is learned from historical data. And so projecting forward from the current price, what's the 5 or 10% lowest outcome, and are you okay with that?
Mm.
Um, um, so understanding, yeah, what kind of range the price can go in. Um, so in those in those kind of basic models, the what's called the expected path is really not the one that's expected. It's just the average, which is probably just flat. And any particular price is going to be far more dynamic than that. But yeah, that's
So a model like that though, Jake, is it gonna take into account um is it always are we always gonna be at the midpoint, right? So one way I think about this, Gabe, is you could maybe take options values and say, hey, the market thinks that we could go up or down this much over time, right? I'd
Mm-hmm.
imagine that's a calculation you could do. The problem is a month later when we when we rerun that calculation, like
Mm-hmm.
today is always going to be the center point,
Mm-hmm.
right? Is that the case with like a model you're talking about here, Jake, or does it allow for him at the higher end of this like possible range?
it does. Yeah,
Okay.
yeah. So a random walk, you're always at the center, as you're saying. For the next layer of complexity more than that, if you have a auto-regressive model where instead of the current price being equal to the last price plus a random number, it's equal to a weighted sum of the last couple prices, where those weights are finely tuned in the model. But if you do that, then that allows for deviations from a mean. So if you look at the forecast instead of just being like a flat line, it's like generally like like a kind of asymptotically goes toward that straight line and then maintains that straight line. So it allows
Okay.
for like deviations away from a more short-term mean.
Yeah, got it.
So, but I guess let's back it up a little bit in terms of like if our core goal is to be considering like, okay, what's a good benchmark, right? And then so Rodney, you were saying one of the problems with the normal benchmarks people use are it's I'm going to benchmark myself in the future based again, and so trying to drive a decision today, whether or not that is to sell or not, but equip somebody so they feel like they're making that decision from a sound foundation as opposed to trying to play a guess game about whether or not we're going to make a new high between now and when I drop the grain off. And so Jake, you're saying, well, look, you could put in place a model that shows you here's the distribution of prices. Are you comfortable on the low end? Back to your original question, does losing 50 cents, are you comfortable with the loss of 50 as you are with a potential gain of 50? Like, are you okay with that? And so equipping somebody to take a look at the market and put a more, I'm going to say, like model driven approach to understanding what that range of risk might be, as opposed to earlier, this is only episode or whatever, 7 or 8 of the podcast. So Rodney and I are talking about this 2, 3 months ago, where corn was above 425 and like seemed to kind of be bouncing around, and folks had a mentally convenient floor price of, oh, it can't go below 425. Nobody was using a model to say it can't go below 425.
No.
Right? They were like, I can't go before 425. Sure enough, went below 425. And we've gone back up and back down since then and around. But like, is what you're saying, Jake, like if you want to make a decision about is today a good day to price, some way arming yourself to have are you saying like the first thing you might do is try to arm yourself to have a view of like what is actually at risk looking forward?
Yeah, yeah. I have it's Jake monologue time. Get ready.
All right.
Um, so yeah, when you first started talking, Gabe, I was thinking that there's two um almost unrelated points. There's one is what's a good benchmark. The second, I mean, sorry, what's a good benchmark for sales across the whole season? And then question number two, should I sell today? It's like they're similar, but they just like kind of felt
Yep.
different. So with regard to the should I sell today, yeah, the that one forward-looking approach, I suppose, is yeah, looking at the price uncertainty and seeing if you're comfortable with the tails of that distribution. But another way to unite the two things is to and I've obviously I acknowledge this is very challenging to do, but to go in with a rigid set of rules so that you know what to do on any given day, and the connection between yeah, what should I sell today or not, and what's a good benchmark, it kind of gets united once that set of rules is established. And so the way that I would approach that, um, in general, when we're building models of anything, we're trying to understand the relationship between X and Y, or where X might be many features and Y is the thing we care about, is to mess around and do exploration on a particular time window. So like train the model on some number of years or some periods or however you want to set it up. And then and then Yeah, and so yeah, use that to figure out the parameters of the model. Like I'm selling this amount by July or whatever other
Mhm.
rules. And then ignore that, but ignore the results, but take all of the model parameters and then apply it to a time window that the model did not see. And so uh, how well does the model do? It's called out of sample on data that it did not see when figuring out the parameters. So anyone can make a good model that works well on the data that it's trained on. It's called overfitting, and you get results that make you really proud of yourself. But yeah, the question is really how does it do on that other out of sample data? Um, and so the nice thing about having that kind of approach is that you you know what you're supposed to do, and if it doesn't go right, you know that you're going to end up ahead in the long term. Um, but yeah, it can be psychologically very, very challenging, of course, as I've heard you guys discuss at length.
Yeah, and analog years are a problem here, I think, in the industry. So, what happens is people say, "Oh man, this year's just like 2022," right? And it's like that model just gets thrown out the window because it doesn't matter what, anything else is. This is 2022. That's just another, potential issue here. That like I would think I just tell you myself, if I built this model, if I could do what you're saying and I built this model, stage two for me would like it would take everything in my body not to be like stage two is, oh, this year's just like 2022, right? And it feels like that's exactly what you shouldn't do. Is that right?
Yeah, so um, I guess two answers. Without making it wildly complicated, because we're trying to keep it trying to yeah not do that. Uh, the appropriate model would take into account what is shared between 2022 and now. So if it's just like 2022, there would ideally be a feature in the model that captured the similarity between those 2 years. And so you'd kind of control for that. And I had a second point that no longer exists.
Well, so I think we should unpack that a little bit. And so first of all, Jake, you mentioned the term overfitting. And so this is a great context for it. So overfitting is kind of what you're talking about, Rodney, where you could build a sophisticated enough model that that looks over 30 years of data and has really great returns when look like it can tell you how to get the best return in any of those years. What it's probably really doing is looking for some pattern at the beginning of the year to identify what year it is, right? And then telling you take these actions because now I know that it's 2022, right?
Yeah.
So a step away from that is what Jake's saying is like, oh, there are attributes about the way a market behaves if early on it looks like this, and then you should take these actions, right? And so, but I guess I want to say, so I mean, the this year is just like that other year has always been around
Yeah.
and drives me insane. And I have found the quick diffusion of that being tell me what's the same because I'm pretty sure 2025 is like no other year that came before.
Yeah.
Like when we start talking about like macro environments, right, and all that kind of stuff, which by the way has always been true. Like 2019 was like no year before it. 2007 was like no year before it. 2003 was like no year before it.
Yeah. Right.
And so as humans, right, we look for these patterns. And so when market behaviors, and the reality is there's like, some archetypal trends that the grain markets follow, right?
For
Like
sure.
the price trends up heading into July and then comes off into harvest. Like that's a super common trend. Also, market, you know, sits kind of still and then suddenly jumps up because like there's a production concern and then it keeps going. Like we see those things. And so it's really easy to go, oh, it looks like it's behaving this other way. Like one, it's that classic mistake where we apply human attributes and emotions to a market, which doesn't care at all about that.
I love
And
that.
and, and secondly, like trying to make like it's really easy as human for one picture to look like another. Like that's like we're built to do that. Like to find pictures that look similar. And so like I said, if presented with that, that conversation generally ends pretty quickly if you start asking specifics around talking to me about why it's that, other than this picture you saw, which is kind of like that picture you saw. Because the answer is never. Like they're never the same.
Yeah.
Even if the outcomes may be the same, using that as your modeling process is a bad process.
Yeah.
Uh, um, so there's all that. So we hit on overfitting, we hit on like really overly simplified heuristics with, or modeling, which would be this year looks like that year. And I think going back to what Jake hit on, ideally what you would identify, and it's a shame Cello's not here because he actually has a big focus on this, right? Is like here are these here are these macro trends that happen in markets, and then he's got a set of models that look really heavily at momentum, so meaning like directionally, which way is the market going, and how far is that off of normal behavior for that time of year, as well as he does have times where he's using market volatility, implied volatility, right? Which is the market telling you, here's what I think the risk looks like ahead. Is it calm? Is it violent? Like what are we looking for? And so obviously most of us as individuals don't have the capacity that Cello does, like to build that out. But going back to benchmarking, right? Even Cello, who has those really sophisticated models, he's trying to hit an average price, right? He feels really good when he's within 2% of the average, right? Like high five, as he should, right? High fives all around. His focus is on recognition of the efficiency I would say the cost of decision making, right? Like we don't want to make a decision every second on whether or not we should be selling grain.
That's right.
Like that's a
That's right.
terrible way to live.
That's right.
Like,
Yeah. Oh my God.
And so I think that's also probably you asked it, but I didn't hear the connect the dots. But I think the implication there is like, look, it's all well and good to have a benchmark that's an average. It's also unrealistic that I'm going to sell 827 bushels a day or whatever, right? Like I'm not going to behave in that way. So that doesn't make sense. Like, that's an unrealistic benchmark too. And so I think part of it is trying to figure out like what what is reasonable to expect from myself. I think that's really what we're trying to get at is like, as an individual running a massive business who's got 8 billion other things going on and dealing like with this market price component, which is a huge part of my success or failure in a given
And I
year.
don't know what the hell Z stands for, right?
Like,
Like,
like, how do I know that like I'm doing a good job at this? Because I could be following the best process in the world and still end up with a loss at the end of the year. And
yeah.
I think that's probably the most frustrating piece, right? And so I need something else to tell me that like, no, I was making the right decisions and that's going to work. If I'm at this for 3 years, 5 years, 10 years, 20 years, I am going to be better off following this. That
Yeah, I agree. And I'll tell you, Gabe, listening to you say that makes me think, God, we just spent an hour talking about how to make ourselves feel better when we do a bad job. But that's not it. That's not what we're actually looking for. What I'm trying to do is protect myself from reacting in the wrong way, right? Because I had a good process that didn't pan out this year, right? That's actually what I'm trying to protect from is like, hey, I didn't hit the benchmark this year. That doesn't mean I should change the way I'm doing anything necessarily, right? It might not mean that.
so Jake, just solve that problem and we'll be good.
Yeah, that'd be amazing.
What would you do? So let's pretend like suddenly you found yourself, whatever you were hired on. You are going to get paid based on your performance on the marketing side, and you can choose the average as a benchmark, or you can make up a benchmark that we'd have to agree to, and that's how you get paid. What would you? How would you approach that?
I would think long and hard. I Yeah, I think the first place I would go for sure is the time weighted average price. And then I would ramp up the sophistication from there. The next step could be a volume weighted average price. So when
Let's go back to the time weighted average price. What do you mean by that?
take the full window in which it's realistic to make a decision over pricing and sell an even amount each
Each day?
microsecond.
Oh,
Yeah.
per second. Okay. So down to the
Yeah,
smallest
it would
increment. Yeah,
dictate.
no, that's fine. Yeah. So down to the smallest increment you could make sales, and so just a straight time-based average price.
Yeah.
Okay.
Yep. Um, that is a particular filter on the market noise. Um,
Hmm.
and then instead of the time weighted average, the volume weighted average. So instead of weighting each, say, day equally, in terms of volume that I'm selling, I will have, and this is a backward looking metric. It's as if I had sold some percentage, some fixed percentage of the amount sold on that day, so that the amount that I'm selling on any given day, the distribution looks exactly like the distribution that everyone has sold across the season.
So on that one specifically, right? So let me try to think of a simple example of that. So I guess basically you're saying if we for that you kind of have to take a conceit that X number of bushels are going to be sold over the course of a year by everybody. And so if suddenly today people sell 10% of that entire, so they sell 10 bushels, everybody sells 10 bushels. So you see this big volume pop.
Mhm.
You would you'd be looking at the end of the day, looking over the course of that day and saying, oh man, like people sold a lot today. So at the very end of the day, you're going to get yourself in line with that. Or would you do it the next day?
I was I was thinking of this as a benchmark for the policy that I am following,
Mm,
whatever that is.
okay.
Um,
Okay. Yeah. Yeah. Okay. Yeah.
uh,
So, okay. So that's the benchmark you're saying. Okay, great. That's the way to gather the peer data you're saying.
yeah,
Okay.
yes,
Okay. So I can see what everybody else did. I'm going to make decisions potentially differently than that still.
yeah, yeah. Um, and so going back to the to like the model in sample out of sample conversation, you could look and say like, what happens if over the last 10 years you do that? You to take the 10 bushel example, to if you what happens if yeah you don't know like at the start of the day what people are going to sell throughout the day. So like let's say you the next day you sell that 10 bushel. How does that end up working out? Is that good? Like maybe you end up maybe that ends up being bad because there's a depression in prices and you kind of get hit. So you can as a testable thing. Um, a another extension of that is that we've been this TWAP, the time weighted average, or the VWAP, the volume, is all in that horizontal dimension of time. And there's the vertical. And so instead of selling maybe that, yeah, that I mean, again, if that makes sense at the given time of year, the current delivery window, if it's optimized to sell at the most advantageous delivery window, considering carry cost and cost of capital and everything. Another extension that starts to, so these things are, there's kind of a spectrum between naive benchmark and what you actually want to do. So
Yeah.
these are on like the more naive benchmark, but a step closer to the what you might actually want to do is yeah, identifying setting rules around what counts as um unseasonable or a notable increase. What is outside the mean or outside of
Mm.
some expected variance and is an opportunity. Um, and then again, as soon as there's, I mean, this would be my approach. As soon as I thought that I identified a rule about what constituted a surprise move in July, I would want to see what if I had followed that advice over the last 10
Mm.
years.
Mm.
How would that have worked?
So okay. So let's just game through like what might a practical benchmark be then, right? So I like the volume weighted average price because I do think one thing we always think about is it's really helpful. at the end of the day, like it is appropriate to gauge yourself against other humans, like making decisions in the same market, right? Like so, as a benchmark. Now, at the same time, that ultimately does feel like it becomes a you're still looking at retroactively, but I guess you're kind of stuck with that anyway, even on an average, like a straight line average, right? On whether it's daily settles or infinitely small time windows or whatever it might be. Um, so but that feels like because that should take into account the big moments when a lot of people jumped on and made a decision, right? So whether or not you did, like it tells you that that was a time, and so it may also give you moments like the reality is that those days are again generally tied to volatility one way or another, like more experienced volatility or expected volatility, and you're probably making a decision then right now, like most folks are, right? That's a compelling one to me.
Hey, would you constrain it to like commitment of traders? Like, would you constrain it to the industry itself?
No, I would look at the traded volume.
Just total traded volume. Yeah.
Yeah, I mean basically because for me it's not even about whether the market well not just for me it's not about whether the market was up or down. The reason that volume was as important is like that's telling you a lot of people thought this was a moment to make a decision. And so as a capitalist, as we talked about, right, one of the things I look to inform me is like, what does the market say about something? And so that's a pretty objective view in terms of what the market thinks. Doesn't mean it's not irrational, right? We give all the other caveats, but the reality of it is, like if there was a lot of volume today relative to most other days, that tells you a lot of people thought today was a good day to take action. And so like it is appropriate then to hold me accountable for choosing to or not take action today, right? Where the default would be, oh,
Mm.
10 times more people than normal made it, took it, sold today, whatever, took action. And so I did as well. Great, I'm in line with the benchmark. I didn't, so I made a decision out of line with benchmark. Fine, right? Like it's not that's not that it's right or wrong, but that starts to tell you the story of whether or not you behaving outside of benchmark makes sense, right? That's the other piece of this is like so fine. People don't like average because of the whatever connotations and everything else. But like the other implication there is like, well, I'm not going to sell the average. It must be because I can beat the average,
Yeah, exactly. Right.
right? So if I'm making a decision outside of benchmark, that's got the only reason to do that is because I think I can beat benchmark, and some people can, but very few people, if you have a quantitatively driven benchmark, can beat it consistently in markets, especially when accounting for cost, right? Whether it's transaction cost or time you spent thinking about the decision. Right? Because if I didn't make the decision because I was busy doing something else, that's not an excuse, right? Like
Yeah,
for poor performance.
that's right.
So
I think another um, thing, I don't know, on the metrics front is that there in general, I don't think I've ever had a time when a single metric or a single benchmark was sufficient to qualify something as a success or a failure.
Yeah.
When we're designing trading algorithms, there's the mean return, and if it's like big, like good for you. But if it's big, but the variance or the volatility is higher, then like maybe you actually don't want to pursue that. Or if the ratio of the mean to the variance of the return is high, so the mean is a lot higher than the variance, but there's a huge drawdown period in the back test, so you end up losing money for like a while before you make it back again. Like maybe you don't want to do that. So point being, I think there's something to be learned from picking as many benchmarks as possible because it's possible that while comparing against the ones that make the most sense, you learn the most, but then there's something surprising that comes out of just comparing to the December whatever harvest price that is informative sometimes also that might point or pick out something informative about your particular approach.
I was caught. There are also like when you model those things, sometimes what people will do is put a higher cost of the money. Like so if there's like a big drawdown and that's a painful thing for you, right? To have, in our world, having a big margin call for an extended period of time. Even though your cost of money might be 7%, you might put the cost of money in that scenario at 14, right? To account for in some like easy to handle way, but also material way that tells you that that's a painful event,
Mhm.
Yeah.
right? Because there can be initially hidden costs to having a bunch of debt outstanding unintentionally, or for a longer period of time, not unintentionally, but so there are ways to think about that. So I bring that up, Ronnie, because I know you're working on a specific view, like trying to create a specific view, the clear view, right? On
Trademark TN.
yeah, TM,
Actually,
TM, TM,
trademark.
TM, TM.
Yeah.
Uh, on these things, and so like that might be, that's a layer deeper, obviously, because like what you're doing is using straight line stuff, but like having those conversations around like, hey, what is pain? Like, is it painful for you? Like, is it things that might help people make decisions about, yeah, this is a profit. Going back to Ronnie always talks about at the end of the day, if you can get somebody to make a sale that's a profitable sale for the business, that was probably a good sale. It probably wasn't the best sale you could ever make, almost certainly not, but it was like a good decision. And so anything we can do to help people frame up decisions to empower them to make profitable decisions for the business, as opposed to focusing on the best decision possible, um, as which is ultimately a false hurdle.
Yeah.
Um, like that's what we're trying to get at. So I think if we just take this recording, dump it into Chat GPT,
That'd be
Jake,
good.
I'm
Let's
pretty
try
sure I
that.
heard Jake say it'll just spit out a model that works for you.
Yeah. But I will say what I heard here is the average of the window of opportunity that we had feels like a good starting point. And we can add some complexity around volume and, every single tick or whatever. But average, I like where we should sit here. Is that right, Jake?
Yeah, and then there's the question of the weights on the average. So there's equal weighting. So if you want to weight each second, each tick evenly. But then there's the volume weighting where you weight each, period according to the traded volume. Uh,
Yeah. And that's the benchmark. That's a benchmark, right? That we could potentially look at. And then, so back to, okay, now I need to make a decision, right? Would it be a reasonable thing to say, hey, I've got this model that's like moving forward over time, right? I imagine it as like a line chart that's going up or down. And like, hey, today we're above that line, right? The current price is above that line. And maybe it's a profitable sale. I should feel really confident in making a sale like that, right?
yeah, yeah. Um, so I'm not a big trader. I have a lot of faith in Vanguard. But I did, long story short, just trade something where I had acquired it, price plummeted for a while because I'm not a trader. And yeah, it stayed low, and then eventually price came back, sold it at a 10% gain. And I say that because I'm proud of myself and I want everyone in the world to know that.
10%,
But
man. That's good
I just wanted
return.
to slide that into the conversation.
Yeah.
Um, but um, but more relevantly, that if and Rodney, I think you've talked about this, and I'm just it's kind of slowly coming back. The If you have a profit target, say um, you expect to make whatever return on your invested capital for the year, which translates into some revenue per acre, or however that translates to in the end,
Yep.
price per bushel.
Yep.
Would it have been? I just thinking like another good benchmark is would it have been possible to achieve that target? Like if you had jumped on it, could
Hmm.
you have hit it?
Yeah, right.
Um,
Yeah, exactly.
And that it and more likely than not, probably if you totally jump on it and you push all your chips to the center of the table, you will not be getting the highs, but you dramatically potentially, yeah, lower the variance of the outcomes.
Yeah. Yeah, I think there's also something here to understanding that downside risk, right? Like feeling that loss aversion before you feel the loss. I think that's important here, right?
Yes.
So like tricking. Like I said, Gabe, I'm always trying to trick
You're always
farmers.
trying to trick people, trick
Yeah, I
all your
want to
customers, right?
trick them into thinking they're losing money so then they can make money.
You're a devious guy. So I'm gonna take this moment to pull up my favorite chart, which is December live channel.
Yeah. Yeah.
Still charging up.
Still
So
charging.
so so Jake, I don't know if you know this, but cattle prices are basically at record highs.
I've heard a couple of people talking about that. Yeah.
Yeah, so the futures price is like super high. I don't think we've seen it flow through all the way to the cash price yet. Like me meaning the hamburger that you and I might buy. Um,
Vegetarian.
Mm.
right. So the hamburger that I might buy. But um, but it's interesting. Although I feel like I saw the first headline on why are beef prices high, literally this morning.
Mm. Got it.
Um, Even though the futures price has been high for months, if not longer. And anyway, so I've I've taken the position that I think this thing's going to come down hard and fast at some point, and it continues to tell me I'm wrong. Um,
Yeah, I don't
so
know. What was our first podcast, Gabe? When did we start this? Like March?
yeah, probably.
So it was probably March there on the chart, Jake, that Gabe told me, man, this cattle market is over. And we've
I,
like since then.
to be fair, I said September. I said once the summer's over, I think
Yeah,
this
right.
thing's going to
Yeah.
turn.
Yeah.
Um, but yeah, but yeah. So it's funny. Is just I don't know what happened here, but poof, big
Yeah.
day or big week, I guess. Anyway, hey
Yeah.
Jake, what is it? What does this chart tell you?
It tells me that if you could make a profit in March, you should have sold.
What
Um,
What do you mean by that?
well, I mean, in my famed 10% trade,
Hmm.
if I had waited another week or something, I could have earned like 20% or something. But I'm still proudly telling this
Yeah.
story to anyone who will listen.
To
Because I
the
feel like if
tens
you
of
can take a
people that are
volatile,
listening to this podcast.
You
what you
should
say?
have told the 20% thing like that. You messed up. You messed up
No,
the.
no, it's beautiful. Like if I feel like if you can get like a reasonable return on something that has kind of wild volatility, you should just take it and
Yeah.
congratulate yourself and
And
have a nice
don't look
dinner.
back. Yeah.
I
Yeah.
think that's right. I think that's what it comes down to.
Um, okay. Any investment advice before we?
Vanguard.
uh,
But no, no, I don't.
Yeah.
Rodney, anything else you want to bug poor
Man,
Jake?
I just want to thank you, Jake, for coming on here. I know we rambled through a lot of different options here, but I really do think this helps people, one, maybe feel better about their own struggles that they have with grain marketing, which is really, really hard, right? And the
Yeah.
decisions associated with that. And two, really framing up a reasonable way to look at benchmarks of your operation, right? So I hope somebody that listened to this, you know, we'll take some nuggets of it and say, maybe I should think about marketing in this way and compare myself that way rather than the day they're delivering, the truckload of corn. The worst part is now these grain elevators literally have the price next to the scale, right? So like you have to see the price of corn. You can't just blind yourself to it the day you're delivering. That sucks.
Yeah. Well, thanks very much for having me. Been a pleasure as always.
Thanks, Jake. Yeah. All right. Anything you want to plug, Jake? Got any, do you have a alt rock band that you're lead singer for, or?
Just come to the great state of Vermont. It's a nice place. It's a little chilly in the winter, but right now it's delightful.
Yeah, nice.
All right. Home
Cool.
Ben and Jerry's and Jake.
Yeah.
All
All
right.
right.
See
Thanks,
ya.
guys. Good to see you.
See you.